Okay, so this was a trade I took on Monday, being the 10th of August. So um over here I took first partial. So I had two positions on. I took first partial and kind of mismanaged the trade, you know, and then I got taken out on break even for the remaining trade, remaining position, So my first partial was over here. Obviously, I took my first partial here, and this remaining trade, that was left, almost at the same entry. So this one was I broke even once I took the partial here. So once I took the first partial for this one, I broke even. Like I had to put my stop up above here. So something like this. My stop was here, and you know, something like this, and then you can see I was taken out, but regardless, price eventually got to my uh, drawn liquidity, my target being this high. That was where my eyes was drawn to. Yeah. So, but before that, let's take a look at why I was looking to buy the market. You know, let's take a look at the reasoning behind the longs. Okay. So on the daily, that Monday on the daily, I kind of I saw. I mean, I'm anticipating that the market is bullish and the higher time frame drawn liquidity is high. Here is my like overall drawn liquidity. You know, so and right now market is reacting from this imbalance, this higher time frame imbalance. You know, uh, so reacting from this imbalance, so it's something to take note of, and that's it. And I can also see. I also saw this week, and I was paying attention to how price was trading at the 50%, you know. So yeah, and again on the 4 hour, we are reacting off of this, imbalance here. We continue going higher, so not much there. So this is where it gets interesting. On the 1 hour, you know, this is what okay morning. This is morning. Okay, yeah. So during morning, pre-market open, the market has been bullish, trading up higher, and then before the actual market open, that's 9:30, we had this sell-off, you know, that was not random. I actually was expecting that. So I was expecting price to trade into my point of interest being this, imbalance here, you know, and mind you, this is that, what is it called? The daily week from the left, previous day, daily week. So I was looking at monitoring how price is gonna trade here, like how price is gonna react when it gets there. Um, so yeah, and also this was a um CPI week, so we had CPI on Wednesday. So I wouldn't actually expect much. Like at the back of my mind, I know that I shouldn't expect much from the market. Like expect much from the market, you know. If anything, just get in and get out as quick as possible. So on the 5 minute, what did I see? So on the 5 minute, um, Caesar daily 50% week. Uh, and on the 5 minute, once market opened. So this is the market open right here, and then it traded down into my point of interest and created this wick on the 5 minute. So I have to mark that out. So this week on the 5 minute. So going to the 1 minute time frame. So on the 1 minute time frame, this is a 5 minute week. You know, so my framework, or my let's say my like the way I look at the market is, if market is really bullish or bearish, and that we've created a wick at the right time in our point of interest, that wick should actually remain, like, price should not trade below the 50% wick. So in this case, this is a 5 minute, and the wick from the 5 minute, this is like from the range from the 0 to the 100, and this is the 50%. So we don't want to see price trade below. Like, it can trade below, but it should be a wick, like create a wick and then closes above. But we don't want to see body closes. If we see body closes, that is a sign, like a sign for you to get out. And it doesn't mean it once it closes with the body, it goes down below. That's not what I'm saying. What I'm saying is, once it gets below with a full body, is a sign for you to, you might consider getting out of the market or of a position. So, so what did I do? I think this trade was a decision failure, not luck, because I didn't actually manage the trade well. First of all, this is the original consolidation. We have sell side of the curve and then buy side of the curve. So this is the original consolidation right here. So this will be considered, you know, original consolidation. Uh, so original consolidation. Original consolidation. Original consolidation. Mm. So this will be considered as original consolidation. And so if we are in fact bullish, we want to see price at least take out the original consolidation. And my framework says I can't take partials until my first the original consolidation is taken out. So once that is taken out, then I can take partial, then I can break even. So what I did instead was, I was looking at this week here. I guess this was because, I can't really remember now, but I guess this was because of, today is Monday, CPI week, you know, no high impact news and things like that. So I was just looking at this 50% week. So that was where I got out. That was where I took my first partial, my first partial here. I took that, you know, but regardless, it doesn't make sense. Like, I'm not supposed to do that. That's not what my protocol says. My protocol says, uh, if you are in a trade, like if you are in fact on site with the market, you know, price is reacting from our higher time frame point of interest. We are in a time of interest. We've created CSD, SMT and all those things. We shouldn't do anything once we're in a trade. Price should only go to either draw on liquidity or take our stop loss. So I kind of mismanaged the trade here, you know. So basically, this trade was a decision failure, not luck failure or uncertainty, you know. So, but it's okay though. I'm not gonna beat myself up, Just have to take uh note of that. Try as much as possible to make sure you follow what the books, your protocol says. You don't do what you do because of how you feel. Because here was just how I felt. I felt that, because market didn't close above the 50%, it should actually, you know, maybe retrace, you know. But then I took my partial and then I broke even. The price came, took me out, then continues. If like assuming I didn't look at this week, like I took that week out, and I was only looking at here the point of interest. Like this was my where my eyes was drawn to the what am I saying, the original consolidation. Yeah, if I only was just focused on that, hoping that price can either go to my original consolidation or come take my stop out. And besides, my stop was even small because I was looking at the week, 5 minute, the 5 minute candle week. Price didn't even, come to 50%, and not even 25%. So showing that it's bullish, it's bullish. But all these ones is just happening after I was taken out. I didn't see that. So, you know, I guess maybe, a little bit emotional here because of these candles and, the volatility it came with. So, you know, and I moved my stuff, took me out, but it's okay though. It's okay. Just take note of that. Always make sure to follow what your protocol says, regardless of what price is doing, you know. So, so yeah, that was pretty interesting. So, but left money on the table. That is okay though. Okay, so eventually the price got to my drawn liquidity, and that was it. You know, but we got we saw price trading down again. And that is a daily 50 percent week. Price could not actually get up there because I was looking at this 5 minute imbalance created. I wanted price to go above that, and then come here and close, signaling that we are actually, going for these highs and eventually, yeah. But of course, this is Monday, CPI week, um, much was not or should not be expected, you know. So yeah, so that was it. Price eventually came down, and let's see what happened. All right, so yeah, that was it. I mean that's it for this one. Um, I think it's very important to you know consider, of course, having a protocol, a plan, system, and then also very much important, following that protocol, that system, because having it is just one step and following it is another, regardless of whatever, you know. So you have a system and follow the system, if you can do that, I'm pretty sure you'll be all right. So that's it for this one, and I'll see you on the next one.